Well, here we are. It is a wonderful morning here in Los Angeles. I'm guessing it's a nice morning on the beautiful islands wherever Emil gallivants around like a prince. And Jeff in Florida, yes?
Yes, South Florida.
So we are incredibly honored to have two of the definitely brightest minds in the space, in my opinion, and the only other show I watch on YouTube, which is Making Sense, Eurodollar University with Emil Kalinowski and Jeff Snider. Jeff, head of global research at Alhambra Partners. Emil, the head of many small nations, although he doesn't like to talk about it.
You're not supposed to give away that stuff.
With royalty in his DNA. And so we're going to get this thing started. We're not going to rest on ceremony today. We're going to get right into it because a lot of times, well, you guys have a good following, and anybody that watches you guys is definitely in the weeds. They've gone down the rabbit hole, and they like very deep dives. So I will not get in the way of said deep dive. I will introduce some questions here and there, and we're going to chat. We may touch crypto, and we may not, but this is going to be a lot of fun. Emil, you want to say hi?
Hello, everyone. I posted on Twitter yesterday that we were going to be talking to you, Nick. So I've got questions for Jeff and for you because people want to have answers about crypto, DeFi. I don't know what DeFi is. And then I want Jeff to answer if DeFi is going to be the solution to the future. But first, you got to tell us what it is, Nick.
Are you going to let me borrow your crystal ball first?
Yes, let me get it.
That's part of the royalty DNA is that you have a crystal ball that I don't have. He doesn't let me use it hardly ever. There it is.
He pulled it off his scepter just now.
Yeah, we have to talk about crypto. I mean, crypto's I say this all the time. Our job sucks. We're looking backwards 50, 60 years at everything that's awful. And all the crypto is looking forward, all the stuff that's actually hopeful and optimistic. So, I love any chance we can to talk about crypto and be optimistic about the future, because there is reason to be optimistic about the future, almost as much as there is to just shake your head in disappointment about everything that's happened up to this point. So we got to get the crypto somewhere.
So what we'll do is we'll pivot to crypto whenever we get a chance. Okay. Right. And we'll spin off his questions. Let me say hello really quickly to Coinbase Account, Biotech Breakout, CC Brown, Scorpion. It's going to sound like I'm speaking a foreign language or particle physics, but these are real names, I assure you. SJO, Theta TV, Sniper Princess, Baykeeper, Andy Panda, Grimzul, Coinbase Account, get involved. Solid Gold. I like Solid Gold, but Solid Bitcoin just passed you up. Pager, John. The real J. Cole, not the fake one. Hologram, Stress Relief, Alejandro, BP Brother, WVS, Joe Pirate, Antonio, JR80, bam. We go over here. We have Biotech Breakout, Hoop and Tony, Nubia, Demayan, Professor XRP, because Dr. XRP was in surgery. Let's see, Phil Moore, Wojtek, JJ, Jerry Hall, of course, Jerry. What's up, buddy? Tom, Ella Paul, Dubai Money. I like Dubai Money. Scott, also Scott Hill, also Michael Murphy across the pond, Bobby, Jimmy James, and hopefully I don't leave anyone out. Emmanuel, of course, Brandon, and even Emil. Emil twice. This is freaking me out, man. And Fishing Magician. Whew. Okay. And Charbel. We will be right back. Actually, you know what? We're not even going to go away. Emil, first question. Tee it up.
My first question from the audience, Nick, can you explain to us what DeFi is? And then Jeff, once Nick explains what it is, here's the question for you. It comes from two different people on Twitter. Let me see here. Okay, so the first one is from AbsP84. Would like to know whether the rise in DeFi will create a Eurodollar 2.0 system. Said another way, does the DeFi ecosystem provide an alternative mechanism for foreign central banks to access the dollar? And along the same lines, at AU Kusmi asked, do you think that DeFi has the potential to disrupt the more traditional lending considerably? DeFi.
So a quick way to explain DeFi, at least as it applies to cryptocurrencies, is you're taking financial products that banks or lending institutions might offer, and you're doing a a quasi decentralized crypto version of those same products, whether it be collateralized lending, it could be, mortgage origination. It could be any financial product you can imagine. If someone builds a platform, offers that product and makes it decentralized, they'll usually offer up, either a stable asset like a stable US dollar or a stable currency for the sake of liquidity pools. And they'll also offer a governance token of some kind that they print, out of thin air and shower the users with as an incentive to get them to participate and inject liquidity so they can loan it out to profligate borrowers. Jeff?
That's a good way to put it. No, and I think, decentralization was in financial services beyond payment systems was always where this was going to go, right? I mean, it wasn't just like cryptocurrency was going to show up and that would take over a role of just strictly currency payments and that kind of thing. There was always had to have been the other component, which is financial services. And you stop and you think about, Eurodollar 1.0, what was the original Eurodollar? It was the original cryptocurrency, or at least a virtual currency. And the way it operated was, essentially not necessarily an open network, but it was a closed network of experts or white hats, or however you want to call them, that allowed the financial system to create the tokens, to create the currency, and therefore gave them special privileges. And so it was a system which featured a tremendous amount of information asymmetry that benefited the big banks. And I think that's really what spurred on cryptocurrency to begin with. I know there's a lot of angst and ire that focuses on central banks, but it's really the banking system that we have to stop and step back and say, they're the ones who have benefited the most from this currency arrangement, which is already a virtual currency, but it has it's a decentralized distributed ledger, but it's so narrowly accepted that it gives rise to these problems of preferencing the banking system. The Austrian economists call this Cantillon effects, which simply means that those closest to monetary creations are benefited the most. They benefit first, therefore they derive the greatest amount of privilege from being closest to money creation. And so one way to get around that or to eliminate that is to have essentially decentralized, open source, almost peer-to-peer monetary financial network where we don't privilege big banks, because that's the way we had to do it before. But in the modern world with modern cryptocurrency and blockchain technology, we can get rid of all that stuff. We don't really need Wall Street. We don't really need brokers and dealers anymore, because we can essentially have a decentralized global peer-to-peer network. At least it's possible. We can get there. And I think that's what DeFi essentially is. It's a way that, naturally moving forward around some of the, lingering legacy issues for a system that's outdated, let's say. So if the system is outdated, that financial services, we don't really need centralized, quote unquote experts to carry on these duties, and we can replicate them at least efficiently and predictably and dependably through blockchain technology, decentralized technology. Yeah, DeFi definitely has. I think that is what eventually ends up happening. It's just a question of how far down the road does it take to get there? There's going to be enormous hurdles, not the least of which will be governments and the banking system saying, we don't want to lose our special place. We want to maintain this privilege that we've built up over the last couple centuries. We want to continue to do this our way. And so there's a lot of unknowns between here and there, but I think it's such a good idea. It's such an elegant solution. And the fact that it is realistically possible right now to get to see a path to getting there, that it's almost inertial. There's the weight of progress is going to move regardless of whether or not banks and central banks and governments want it to.
Do you think, Jeff, that banks and broker dealers and stuff will acquire their way into DeFi? Simply just
that's absolutely part of the defensive strategy. Who's pioneering some of the blockchain stuff right now? The banks are. I know they're writing repo transactions on blockchain technology. They realize, I think at least some of the more astute banks and bankers realize that, we're basically outdated here. We're being put out to pasture unless we do something about it. So yes, they are going to find, or at least attempt to find, their ways into the process, because they need to remain relevant. They need their business. The bank business model has completely been rewritten, and it's no longer the way it used to be before. And so if you realize that, you have to understand that I need to get ahead of the curve rather than risk being put out of business when that technology matures enough that it's actually adopted.
So I have a pivot question. Well, it's related to both the show that you guys did and one that we touched on about rehypothecation, recollateralization of repledging, right? So would blockchain-based provenance or tracking of who owns what change, demonstrably change repo right now?
Oh, absolutely. And that's the thing. I think that most of the big banks don't want to.
Right.
Again, they've given themselves, I mean, it isn't like they meant it to be this way. It sort of arose to be, an organic ad hoc thrown together kind of a process that just at the end of it happened to privilege them. They are given a tremendous amount of, they're on the right side of information asymmetry, which, we have no idea what goes on in these places and only the specialists do. And, we can make, there's reasons why that's the case. And if we reveal all of these transactions, establish provenance in blockchain technology, especially for things like, collateral crossing geographical borders and national boundaries, especially, that eliminates some of that, maybe not all, but most of the information asymmetry, which would allow for a much better marketplace. But if you're one of the banks that are benefiting from the asymmetry, then you're going to resist that kind of advance.
Is that kind of, Jeff, are you alluding to kind of like the Reg K shuffle where, let's say you have a subsidiary in the UK and you're in the US and, the rules might not benefit you, but you go and you just transfer an asset, repledge it in a different environment where maybe the legal structure is different and you can kind of get away with these kind of repledging sidestep. That kind of stuff goes on a lot, doesn't it?
Yeah, what's the term, Emil? We talked about it before. Non-harmonized rehypothecation regime. There's actually another term. I didn't get the whole. That's exactly what you're talking. I mean, really, a key element to the 2008 financial crisis was exactly what you were saying, is that banks were able to essentially jurisdiction shop which jurisdictions allowed them to do the most. And remember, rehypothecation, repledging, reuse is a form of leverage itself. It allows banks to do more. And then, look, there's legitimate purposes for it. And it's one of those things that got out of control. So, there's all sorts of those kinds of structural inefficiencies that privilege those who understand the system the way it works.
So real quick macro question, back to this repledging. Let's say you're 8x deep, right? That daisy chain of owners of recollateralized collateral. What happens when that unwinds?
Yeah, that's the secret, right? And I think, there's a misconception here, and I'm as guilty of perpetuating as anybody else. Is it's not like there's a single chain of reuse. There's like this amorphous pool of collateral where stuff gets reused. It's not like there's, I buy a bond, I'm a hedge fund, I post it with a custodian who then reuses it to another guy and another person and another person and another person and another person. There's not like a single chain. It's sort of like I'm a hedge fund, I buy this treasury, and it just kind of goes out there. And it goes out there in a dynamic way because everybody's running portfolios. It's not a linear transaction of one after another after another. And so it's not like you can say, oh, this specific collateral chain is breaking down, therefore the 7 other counterparties attached to it, they're the ones who have trouble. And what ends up happening is parts of the system start to break down. Some of these chains start to break down, which constricts the entire pool because everybody starts grabbing for the best quality collateral at the same time. That's why you see these collateral squeezes, these periods where it's obvious that there's a collateral shortage or a safe asset shortage, whatever you want to call it, because the pool itself starts to constrict, and it does so in a way that it's almost impossible to predict what kind of spillover effects it's going to create. Go back to March of last year, for example, almost every market around the world experienced liquidation. And I believe, I think the evidence is pretty clear in showing that it's because of how short collateral got to be. And then as those chains started to come back, start to implode on themselves, it meant that there was no liquidity in any market anywhere.
Well, that's fine though. We're okay because the Fed has all the good stuff.
Yeah, they make it worse, right? I mean, that's it's amazing that after all these years, they're finally starting to realize, hey, maybe QE isn't as good as we thought it was. I mean, first of all, it doesn't work. It doesn't create all the intended positive effects that we think that it's supposed to. But there's also this downside to it, this very clear, very real, very dangerous downside, which is in transacting quantitative easing, the central bank has to buy an asset from a banking system, and it creates bank reserves offsetting it, which we only focus on the bank reserves. At least we're told to focus on the bank reserves. But in the other side of the transaction is probably the more prominent and probably the more relevant part, which is we remove safe assets that are in use. So the safe assets that go into the central bank's hands are more currency-like than the useless inert reserves that the central banks create as the offsetting transaction and quantitative easing. And finally, they're starting to realize that, look, when we do quantitative easing, at the very least, it causes the dealer system to have to adopt to it. We take collateral out of it. They have to do all sorts of risky, dangerous types of things, like stretching those collateral chains in order to make up for the collateral that the central bank removed that gets called money printing or pumping real money in the real economy when in reality and in fact, it might be the exact opposite.
That's just bumper sticker propaganda, though. Basically, the whole money printer go burr thing. Every time I hear that, I want to headbutt somebody. The money printer has never gone burr. It's a coupon printer, and all they do is replace coupons with quality collateral and hoover it up out of the economy. And then I guess bad behavior is next, right? Like you have to take risks when the highest quality assets are gone. You got to make it work, I guess, if you're a broker. And then they start taking risks, and then those risks get bigger and bigger, and then kind of like you're saying that the little tendrils of and a lot of people don't understand this. You talk about this a lot about how when you're in repo, when a business, whatever is in repo, it's not a transaction here or there. It's a whole variety of transactions to manage a giant portfolio, a lot of it happening in semi-real time. And
you don't have just a variety of assets. You also have a variety of liabilities, and liabilities are nothing more than your funding sources. And so, you have a portfolio of assets. You try to match the best funding strategies for those assets, which include, repo. If you're especially a risky hedge fund, that might be the primary way that you fund your entire portfolio. And so you have heavy exposure to it. And a lot of dealer banks are the same way. They, especially in the pre-crisis era, they had gotten almost hooked on repo because it was such a big part of how they funded their operations. And it's really, you have a portfolio of securities and you have a variety of ways to fund them, including derivatives. It's not just repo. It's not just unsecured borrowing. It's not just deposits. There's also a tremendous amount of derivatives that fund these various dealer activities. And it's a very complicated process, which again goes back to what we were saying before, information asymmetry. The dealers know what they're up to. They know what they're doing. They may not know all the implications and all the downsides of it, but they at least know what they're doing. And some of the things we're doing, most people in the street have never even heard of. And that's kind of the way the system had developed. And I think that's one of the reasons that animates cryptocurrency and crypto people is because I think the common public target is, central banks are printing money. They're the ones that are responsible for all this. They know something's wrong with the monetary system. They may not know what it is. And I think that's really, to me, that's the most positive thing about all this is that people are aware and awake that something's not right in the monetary system. And let's look for solutions and not wait for the government or the banking system to get off their butts and fix this for us.
So, and Jerry just put this panel. I read yesterday that the first DeFi home mortgage was issued and all terms are governed on the blockchain. So if we saw this move towards these decentralized financial products or partially decentralized financial products, is there a point where the crypto space is going to have to kind of get a little case of act right? I'll use this example that you can go and park Bitcoin on a platform and get anywhere from, 5, 6 to 10%, which is, way higher than junk is paying. And so that tells me that there's a cushion in there of money that may not actually be viable in the long run, right? If the whole world has priced junk at, 4.5 to 5%, and those are companies mostly with a 50% chance of going bankrupt, then I'm not sure how the crypto space can pay 10%.
Yeah, I don't know either, but I think that's the adoption premium, right? It's a new technology. It's not mainstream. It's not orthodox. And therefore you have to pay an above market rate in order to entice people onto your platform. I think, that's not, I don't think it's unnecessary or it's not unusual when we're talking about a radical, potentially paradigm shifting technology that isn't, it's a complex issue and it's not something that most people think about. And so there is going to be a steep adoption curve with it. I think, just the price of Bitcoin today is another example of that. The fact that a lot of people have thrown money at the crypto space because they don't really know why. And so there's an adoption and a learning curve. And I think what you're just, the higher rates that you have to pay or that are being paid to get people to borrow in crypto is that curve becoming, it's starting to assert itself in the fact that, look, right now it's not a widespread common thing. And so you have to pay a little bit extra or a lot extra to get people into it. But once that happens, people start migrating. Those premiums should start to come down. And if it works really well, those premiums come down very steeply. Right. And that's really when we'll know that we've kind of reached maybe a tipping point, or at least the first critical point that suggests that crypto is being used in a widespread fashion, or at least widespread enough fashion that it's becoming a viable, reasonable solution to the system as it is. And that, who knows when that'll be.
Emil, you're in.
I'm in the back of the class. The audience has a question. Can I ask a question for the audience on behalf of the audience?
Get at it.
Well, there's the question I want to ask is the biggest topic in crypto that's been taking place over the last month or two. And I'm going to ask that after this question. The question is, this one is coming from @wholegrain U308, which I think is uranium of some sort, this unstable form of uranium. It's for Jeff, and I'm going to ask it to Nick as well. Maybe ask, what is the view of the perfect crypto asset? What are the properties of the Nick coin and the Jeff coin? So Nick, what would be the perfect properties? And then Jeff, you come in afterwards. What would be?
My Nick coin would be a basket, a constantly rebalancing basket of currencies, probably the 8 or 10 largest in use international digital assets. So if you took China, the US, Europe, whatever the Eurozone produces, and you had all those assets in a basket that directly tracked currency creation, and it basically shrunk with currency creation or expanded with currency destruction by way of taxes, so that you could have an expansionary and a contractionary currency that represented all world digital currencies, if that makes sense. Because I think you need something like that to be able to kind of absorb the overgrowth of an expansion and the free flowing credit and credit availability and cash, and then also be able to contract when it's time to get, a little bit less excited, a little bit less heated, and protect from those big giant catastrophes of the end of a business cycle. Jeff.
No, I love the way you just put that, because I will wholeheartedly agree. Those are the two big things. One, it has to be international. It can't be a national currency. And two, it needs to be dynamic. And I think that's one of the parts that monetary people get wrong a lot, is that they think money supply. I think what we need to see is that money supply is dynamic.
Nick, can you hear me?
Yeah, I can hear you. I think we may have to run his answer back.
Well, I thought your answer was fantastic. Good thing this isn't live, so we can just go back and undo everything, and
just reshoot it.
No one will see me.
You started to
my nose.
Can you give us your description again?
Yeah, going back, I don't know where I fell off, but what I was saying is that, look, money supply needs to be dynamic. It needs to respond to conditions in the marketplace, and that's really what the banking system was supposed to do. It was supposed to be an intermediary in the literal sense of the word, which is look at conditions and say, look, we need to add more money to the economy because it's growing. It's legitimately growing. It's not growing for speculative or stupid or insane subprime mortgage kind of purposes. It's actually doing the right things. And there are times when, we've gone too far. We maybe need to come back a little bit, but not back so far that we end up in a deflationary episode that causes even worse problems. So we have to define a way, or somebody needs to come up with a way where money supply can respond dynamically. And what I would say, what is the most ideal form of cryptocurrencies? I don't think we know what it is yet. I don't think it's been invented. And I know that's kind of a cop-out. It's like, it's something somebody's going to come up with in the future. But I don't think we have any idea of what that will be. And I think it will, when it does come about, it will be the outcome of a successful competition with other forms, Or maybe it's not like one or another. Maybe they combine. We figure out what the best attributes of each one is, and we select those attributes and come up with the final coin, the coin that combines the most efficiencies and the most solutions together. And I don't think that's been invented yet.
Kind of an organic SDR, but in my mind, it's got to be pegged to currency creation. And when we see those units of currency or credit enter the economy, then that has to be factored in. It can't just be, oh, this government did this, 2 trillion here, 6 trillion. That has to be a part of the expansion or contraction of the money supply, I feel.
Well, if we're doing it right, governments have nothing to say about it. Right. I think that's maybe the third key part of this. And that's really where it gets, you really get into the red area where governments are going to say, well, wait a minute, what do you mean we're not going to be part of it? And I think, Eric Townsend talks about this a lot, where he says that, the crypto solution is not going to be completely private. And it's not, there has to be a role of government, and maybe not central banks, but governments are involved in there somewhere. But it should never be the decision of government to print currency again. That should never be allowed. It should never happen. Maybe there's some kind of partnership where we can strike a balance between public and private interest and figure out a way to do that. But ideally, this is a market-based system, and therefore the governments will have, maybe minimal input. And, they're not going to like that.
Kind of a quasi-capitalist money. Okay.
Emil, go ahead.
No, I was going to say, Emil.
I wanted to segue because, Jeff, the way you ended there leads well into the number one question that's been going around crypto in the last couple of months, and that's Mike Green's thesis. And he's had all sorts of individuals, well-known individuals in the crypto space, except for Nick, which is a crime. He hasn't talked to you. But what he has proposed, that the Bitcoin that we see is not as free market as we want to believe it is, and that perhaps it is under the thumb, or could be very quickly, of China, Russia, Iran, and that perhaps this is a danger, and that Bitcoin itself is not what it appears to be, that perhaps it is the Odysseus Greek horse. Perhaps it's a Trojan horse here. Nick, you understand this topic. It's been talked about constantly. What do you think? And then Jeff, what do you think? Is there any legitimacy to these concerns?
To an extent, you're right. Any store of value that's owned, 90% of the supply is owned by about 18 people, is probably something you want to question at its face. I don't think that takes away from the value of Bitcoin as a new technology which introduced the world to the idea of a blockchain, to a distributed ledger, and to all these cool, solving the Byzantine generals problem in software engineering and all this. So for all the good that it did, there is an argument to be made that it's held by a very minimal amount of people. But so is the real estate market. So is every real asset market in the world is predominantly owned by the wealthy. It's a small cohort that owns, 90% of the world's assets. Kind of an is what it is type thing. I think that probably skews in every major asset class for the most part, except maybe government debt, which whatever. But so my point would be there is some truth to it, but that's in every market. Two, the idea that China controls Bitcoin may have been an argument 3 or 4 years ago, a really legitimate one. Now that mining has become, because it's become so important to these financial institutions that are starting to take on exposure to Bitcoin and to all of these markets, these regulated markets, the futures markets and stuff that are being built around Bitcoin specifically, mining has emigrated out and is now finding pockets all over the world, whether it's green, whether it's hydroelectric. And so that is starting to dissipate a little bit. China's control over Bitcoin is starting to wane a little bit. That'd be my 2 cents.
Look, I think Bitcoin it was the one that started it all. So there's definitely value to the blockchain technology now, and there's definitely what has given us in terms of possibilities for the future. Absolutely, it's there, and there's value in that technology. But I think any type of currency system needs to have a wide base for its pyramid. That's currency. Bitcoin just does not have it. It doesn't have the ability to be a widespread, wide accepted actual currency. Therefore, it can't really perform the roles that, especially if we're looking at it in terms of an international currency, a reserve kind of currency, a replacement for the Eurodollar system. I don't think Bitcoin has the chops to do it. It's technologically limited. There's all sorts of other factors involved that are limited. And it does make it susceptible to potential bad actors. The Hunt brothers cornering the silver market in 1980. I mean, that happened. And it was, everybody thought the silver market was this tremendously massive thing. But, markets are susceptible, but you don't ever want to have currencies be susceptible to that kind of thing. And it is a legitimate concern with Bitcoin. And that's why, look at something like Ethereum, which is, trying to replicate some of the successes of Bitcoin, but also building upon what has been learned from it and building a much wider foundation for it. Maybe it isn't. Maybe Ethereum's not that wide of a foundation either. But at least, the idea is that we need to have a broad-based, widespread acceptance and widespread, manufacturing of all these factors that go into making a currency what a currency is supposed to be.
Well, and I would just add to that, Jeff, that I don't think Bitcoin is a currency. It may have started as this peer-to-peer payment system, but I think most logical reasoning would point us to that Bitcoin is not a currency. It's a store of value, and maybe that's okay. Maybe that's enough, right? As a little savings account, like a gold 2.0. I don't think there's going to be a hyper Bitcoinization. I don't think world governments are going to convert to Bitcoin. There's all sorts of, like you said, structural problems with that and technological, it's inadequate to serve that function. But as a store of value that could sit on a balance sheet and maybe replace some of your exposure to gold, I think it makes sense probably for that specific use.
No, and I agree with you. I think there's absolutely value in the technology, and it is as an alternative asset, there's going to be demand for it. The question is how widespread would that be and how sustainable it might be into the future. And I don't know. I mean, I'm not trying to answer those questions. I'm just trying to ask them. That's something that other people are trying to think about. And I agree with you. I don't think Bitcoin will ever reach the point where it becomes an actual payment currency, which is, that's my interest and my area of interest in particular. We're talking about the monetary system. That's what I want to see. I want to see a way around this Eurodollar dysfunction so that we can have global economy-wide solutions to what are massive problems. And I think that's really the value that, in my mind, in my analysis, what Bitcoin raised was that it pioneered a path to get to that place. And that's really the positive outcome of it, whether or not it actually gets to that far in currency.
So if the Eurodollar system was on a blockchain, we'd finally know how goddamn big it is.
Yeah, exactly. And I don't know if you could put it on a blockchain. That's the thing.
But surely that is simply not possible because we're dealing with humans on Earth and not in heaven. And there will always be the demand to go into the shadows and to find a way around the regulations. The whole Eurodollar system came out of that need because of the financial repression that was in place after the Second World War. So it's just a pendulum swing, right? And we can never hope to have some sort of perfect system. There will always be the City of London or the Cayman Islands or somebody looking to offer a alternative, a regulatory arbitrage, surely, unless we finally reach that moment, Jeff, that you've been waiting for, a unified single government. World government.
Yeah, world government. I would love to have world currency that has nothing to do with any kind of world government. And I think, look, that's really what we're talking about here. The global economy is a global economy, and it's been that way for a very long time. And so we're not really talking about national currencies anymore. And let's face it, governments don't want to give up what they assume is a privilege of having a national currency. So it's up to the marketplace to say, look, the world has progressed beyond the simple 19th century thinking. And we need to think of it in terms of what's best for everyone. And what's best for everyone is to have a functioning global monetary system that isn't a persistent drag on economic growth. And therefore, there is no privilege to national currencies anymore. And there hasn't been for a very long time. So stop thinking that way. Let's find a way to, look, the monetary system is already broken down so many boundaries and barriers to begin with. Why not embrace that? Let's take the best aspects of it, which I think crypto is starting to do, and propel them forward into something that's much, much better. And again, that's why I keep going back to looking forward. There's lots of reasons to be optimistic, whereas looking backward, you just shake your head at all the idiocy.
It's kind of an uber national currency where it kind of runs on top and people have the option, but the desire to use those kind of those protected currencies would probably dissolve pretty quickly. So who knows? We may see a one world currency, but that currency may be a basket of currencies.
Yeah, it's layered. I look at it as layered, different currencies for different kinds of functions. And I think there's maybe a big currency or, a trunk currency. And then there's other, it doesn't have to be a single unit that's available for there could be different purposes. It's really, that's why I say, I don't think that the ideal currency or the ideal crypto has been invented yet, because I think we don't really know what we don't really know. Right. We don't really know what's the best solution to some of these other things, because we're really just starting to think about them. And it's not something you just slap together overnight. Because if that was the case, the Eurodollar system would have been replaced on August 8th or August 10th of 2007, instead of, here we are 14 years later still talking about it.
Emil, what do you got for us?
Well, you've caught me off guard, so I don't have a question from the audience. So I will ask one that I'm
had
concerned.
The second question that you had couched.
Oh, it was the one about the Mike Green thesis regarding the geopolitical Trojan horse aspects that might be.
I love Mike Green, but he's a little bit sour on crypto. I think he's one of those people that he's incredibly intelligent, and maybe when you're incredibly intelligent and you miss something big like that, it's hard to accept.
Let me ask this question. Over the weekend, I heard a rumor that Janet Yellen was going to ask for 80% capital gains tax on Bitcoin trading. Obviously, completely unsubstantiated. But I think that is the general direction that our societies are heading. My favorite kind of worldview for the next 10 years is that we're going to be entering a period of financial repression, whereby real rates are kept below interest through heavy government regulation and intrusion. And therefore, pools of savings are going to be moved from the wealthy, quote unquote, from savers, and it's going to be a wealth transfer and pushed to perhaps the poor, the debtors, that sort of a thing. That's kind of what I see over the next 10 years or so. And Bitcoin is a life raft for that, for people who have savings, who don't want to participate in seeing their savings destroyed. And so you would think they would get into Bitcoin or gold or whatever to try to escape financial repression. But governments are not going to let that go so easily, are they? And so my question to Nick and Jeff would be, is this sort of the idea of taxation and the government's going after crypto assets, is that still a possibility? I know we've just had the Coinbase IPO and supposedly Bitcoin is so big, but I look back to the 1930s and I see so many countries going after gold, which was even bigger. So I think there's nothing that governments won't stop at if they feel they need to do this wealth transfer, financial repression. Nick, is Bitcoin free and clear and impervious because it's grown so big?
I would just say this. I would say because of the different DeFi solutions that now exist, because of the ways you can take Bitcoin, collateralize it, and basically lend to yourself, I don't know that a confiscatory tax scheme like that makes a lot of sense. Most people will simply eject from the system and they'll do it their own way. If I have an 80% tax on Bitcoin, or I can originate a 5.9% loan to myself, okay, I'll just live in debt to myself with no tax burden. So I think a lot of people, game theory wins is my guess. Jeff?
Yeah, I think once the stuff is loosed into the environment, there's no going back. Hey, I'm in South Florida. Somehow Burmese pythons got into the Everglades a long time ago, and governments have been hell bent to exterminate these Burmese pythons for 30 years now, and there's more than ever. They have been ineffective at exterminating Burmese pythons because they found the perfect ecosystem where they are the top predator. They are the apex predator in the Everglades, and there is no eradicating them. There's no, short of burning the whole thing down, you're not going to get rid of these snakes. And I think that the cryptocurrency has been unleashed in the environment, and it has been done. It was done such a long time ago while governments were looking the opposite way, had no idea they should be paying attention to this. It's too late. They can try to repress Bitcoin. They can try to repress the next one. They can go after Ethereum. And it's easy enough, or at least, it's somewhat easy enough and reasonable enough that the barriers to entry are getting lower and lower, that something will just take its place. They are going to be perpetually behind the curve. They will attempt to snuff out any currency that looks like a viable alternative, but I think they will fail. Inevitably, the market wants what the market wants. And as soon as there is a digital solution that checks all of the boxes, and there's a lot of boxes to check, but as soon as all those boxes are checked, forget it. Governments are going to have to realize that there's no way they're going to be able to exterminate crypto, or even contain it to a degree where they can exercise what they would argue is sufficient control over it.
So this is kind of a cool question. I'm going to put this one to Emil. Carl asks, do you guys have anything specific looking forward that you're excited about? We talked about my thing that I'm excited about earlier, which we'll bring back up. Emil, what are you excited about?
I am excited about, I always talk about how I believe we're in the fourth turning, and after this terrible era, we'll have a golden age. So I'm not going to bring that up because I always say that. What I'm excited about are those pieces of art behind me, which are by David Parkins. And I haven't had the time yet, but I want to investigate NFTs, non-fungible tokens, and make this incredible art available and try this experiment and see what people would think of owning some of these fantastic pieces of art, which in my opinion are the best political satire cartoons, illustrations in all of media. Earlier this year, I thought it was just financial media. But I am now at the point, this is the best stuff we're seeing across any sort of illustrative satire in any sort of media. I'm
going to disagree with that, Emil, because, from my perspective, I spend hours upon hours doing primary research. I write thousands upon thousands, if not hundreds of thousands of words. You and I put together this podcast that goes hours and hours and hours. And David puts together a thumbnail that sums up all of that work in just a single thumbnail. So I hate the guy. He's much more effective than I ever wish I could ever be.
He's cheating through creativity, isn't he?
No, he is, and it's actually brilliant. Some of the thumbnails he comes up with, I just shake my head. I'm like, what did I just waste all my time for? I could have just have David draw it. It's a picture's worth 1,000 words. No, it's worth 1,000 Eurodollars.
So I want to throw this out there. We talked about this a little before the show, but I want to throw the two things on my horizon. One, where we're currently at in the greater just investment space is this chase for growth over fundamentals. And then, rental Mageddon, which is, the end of free money, the end of free rent, going back to work for a lot of people. That's coming pretty soon, or something's coming. What are your thoughts on that, Jeff?
Yeah, well, as we talk, rental Mageddon. I think the idea, and it's being traded in a lot of marketplaces, is that, look, government is going to underwrite the loss. Any losses that were presented by COVID and the overreaction to the pandemic, the governments are going to absorb them. And I think governments have tried to make it clear that they want to, but are there any limitations to that? And of course, there's practical limitations in how you implement any of these programs, as well as, maybe these checks aren't unlimited. Maybe there is a limit to how much the U.S. Treasury can and will be able to, send out to the private sector. So maybe there's a mismatch here, because it seems to be in some places the idea that there will never be a single loss from the COVID emergency ever booked by anyone anywhere. And there's other people who say, yeah, look, there's going to be a lot of losses taken. Maybe it ends up being somewhere in between, but this will not be a consequence-free event. At some point, there will be some kind of consequences. We just don't quite know what they are, or how bad they are, or how widespread they might be at this point.
Well, I'm preparing to start paying rent again. I don't know about you guys. But it's been 17 months and it's been great while it's lasted, but I guess I'll pay. What do you think about the chase right now that we see, just kind of this chase over growth, over green candlesticks, fundamentals, be damned. This kind of market, this YOLO market sentiment.
Can I jump in very quickly regarding the last part? Because I feel like I have something to offer. One of the ways that governments pursue financial repression is through rent controls. And you could see how it wouldn't be too far from where we are now, where you're just helping people get through the corona right now because everyone's unemployed. Now that it's passed, you would think you should be able to go and raise rents or charge rents. And governments may step in and say, no, why not? Because the whole purpose of financial repression is to keep inflation above real rates of interest. And if you can't get it in government bonds, you can't get it in the financial markets, what better way than housing, where you can charge rent that would keep up with inflation? And that's why we saw it during the Great Depression and immediately after the Second World War. And I think there's, still some leftovers, holdovers, grandfather, incredible apartments going for nothing in mega cities. So financial repression, rent controls, let's keep an eye out for that. It'll come in the name of helping people, and it will, but it'll also help keep savings out of a place where they could earn a real return on their money, which is, coincidental. I'm sure that's not really what government is after.
Yeah, there's always mission creep, right? Once you create a bureaucracy, its entire existence is about justifying that. So and you're right. Once the government starts to, there is no such thing as a temporary tax increase, right? We all know that. They're sold to us as temporary emergency measures, and then they become permanent, and then they find other justifications that over time have absolutely nothing to do with the original mission. And is it so much an economic thing as a political thing? It's probably a blend of all of those things.
Well, that's just almost a human thing, right? No one gets reelected on the let's tighten the waist belt, let's quit spending, let's quit going out campaign. People get elected by saying, we're building more bridges, we're going to give you money, we're going to make everything great, everybody's going to live the high life. Can't really finance that, so we just find weird ways to kind of create things that don't really exist. And I think we live in a society where, and this is part of the whole YOLO community, where everybody believes they deserve it. There's this real huge sense of entitlement. Like, I deserve all those things. Shouldn't have to work for them. I am entitled to them.
Yeah, well, I was just going to say, Emil and I talk about this all the time. Vigilantism, bond vigilantism, where is it? That is the natural check upon profligate governments. Whenever governments get out of control, it's the market's job to step in and say, look, you've gone too far, you're doing stupid things, stop it, or we're not going to buy your bonds, and you're going to be, you're going to have to hyperinflate yourself into disaster. But over the last 14 years, bond vigilantism, and really go back before that, bond vigilantism has disappeared because of this monetary problem. So the monetary problem, which has preferenced government assets, government bonds, means that governments have been able to take advantage of the fact that vigilantes have been co-opted by a global monetary shortage. And so there is no check upon governments anymore, which is why very Japan-like governments have gone far beyond any common sense or any kind of traditional sense of where their limits should be. It's sort of a quirk of history where we have vigilantes being overridden by other considerations that has allowed governments to go crazy. And in going crazy, like in Japan, what we see is that actually harms the economy, which raises the risks in the economy, which makes the monetary shortage that much bigger, which erases more vigilantism. And it's a self-reinforcing spiral where's the off-ramp? And that's really, again, getting back to what is crypto about. Crypto is about trying to create an off-ramp from a process that is completely it's unworkable.
And Nick, I would say you're being unfair to people, because in different eras, I know so I would say you're being unfair. I would say in different eras, austerity can be done and would be welcomed. And those eras are when there's economic growth and when people are looking forward to the future and they believe that they're going to get a better job soon and they're going to move up the income deciles. But we're not in that moment. We're in a moment of 14 years where we're in a silent depression, where the economy stinks. And even before that, jobs were being offshored. So I think it's understandable that people are saying, where is mine? You're telling me everything's fine, everything's booming, the stock market's up and unemployment is down? I don't think so. So it makes sense for people to look for handouts now because they're angry, because they've been told everything's fine, but it's not.
It seems like the kind of austerity we see is, like the Venezuelan diet kind of austerity, where the man behind the camera says, listen, it's all of our job to
austerity. That's one way to put it.
But you know, forced austerity is not really austerity, is it? That's just at the edge of a blade, right?
No, that's you've reached the breaking point. You've gone too far, even the market can't rescue you anymore.
So what do you guys see just off your gut reaction? What does the next 6 months look like, you know, to you guys in the greater space?
Well, I'll give you not a prediction so much as a guarantee, a stone cold lead pipe lock. You can go to the markets. You can bet this as if the game's already been played.
This is trade. This is trade.
Jeff is thinking, oh my God. No. I would think that we're going to be slowing down, that things will not be as wonderful and optimistic as they are right now. And I think we'll be seeing slowdowns in the rate of inflation, the rate of growth. And if there's anything, whenever you slow down, whenever you lose momentum, then if there are any sort of hiccups, any sort of bumps in the ground, that could wobble you. And we'll see if, you know, anything knocks this reflation over. But I think the great enthusiasm of this reflation, these are the last few weeks and months of it. I'm not as optimistic for the second half of the year.
No, I think that's, you know, looking what the bond market certainly is looking forward to. I think that's exactly it. You know, leading up to the big stimulus when was at the middle of March, there was all sorts of optimism. There was all sorts of, you know, hey, this is going to be the big one that's going to be great. And then once it happened, it was sort of like, well, okay, now what? People say, okay, now that it's actually the checks are going out, the government's doing all this intervention. And it's not just the United States too. Remember, this is a global phenomenon. It's sort of like, okay, that's it. Maybe this isn't so, you know, this isn't a perfect way to get us out of this mess. And it's sort of, we're in this honeymoon bubble with government largesse. And now we've gotten out of the honeymoon phase. And we're starting to look at what does the world actually look like once all of that stuff starts to come off, once all that stuff starts to stop. Is the economy the same as it was before 2020, which, as we've said, that it's not a very good economy to be going into anyway. But what are the chances that we're actually long run harmed? Slow down, absolutely. That's going to take place, and I think that's probably the base case in markets. But then it's even beyond the rest of this year. What's next year look like in the year after? What does the 2020s really look like? And there's this real palpable sense that it's not the Roaring 20s. That it's, you know, as bad as the 2010s were. You look at some of where the curves are and some of the market prices and indications. It's like, how can we be worse than the 2010s? But yet right now, after all of this stimulus, after all this quote unquote stimulus and stuff that's going on, that's really the market's point right now. Right now, as today, the 2020s kind of look worse than the 2010s.
Famed demographer Neil Howe was just answering that question, Jeff, about the Roaring 20s. Is that what's ahead of us? And he was unequivocal. He said, absolutely no chance, zero. You never know, but absolutely no chance. And he came at it from a demographic and cultural and generation perspective. Like, what is the behavior of this generation versus that one? He said, just no.
Yeah, and we approach the same thing from a market perspective, a curve perspective. You look at the Eurodollar futures curve; it has steepened, and a lot of people have made a big deal out. Oh, it's pricing rate hikes. Well, no, it's pricing the probability of rate hikes. That even as much steepness as the curve has gained over the last couple of months, it has stopped. It's still nothing. It's a low flat curve that says the probabilities of 3-month, let's put it in specific terms, the probability of 3-month LIBOR being somewhere around 2% by the middle of the decade is low. And 2% 3-month LIBOR does not describe a very good situation. It describes an incredibly awful situation. And it describes one that we've seen before in Japan. It's one where there's no growth and no inflation and all sorts of other problems. So even after this big reflationary trade that we've heard about constantly over the last couple of months, with trillions of dollars and trillions of euros and all the stimulus, the market is saying we're looking ahead and it doesn't look good.
Stimulus ain't what it used to be.
I don't think it ever was. I think that, it's, well, I mean, it's the market saying we've got big problems. And the thing is that we had big problems before COVID, and now we've got a bigger problem on top of all these things. And it makes sense. It's common sense that you would think, how do you get out of that without any sort of consequence? I mean, that's fairy tale land. That's not reality.
Yeah, it's a lot of people telling themselves we're about to go into the best economy ever, just like before. And then you go, but if you look, before was not the best economy ever. So, I just keep thinking, this move back to trend, everybody likes to watch 16 minutes of CNBC and then go tell everyone that we have a K-shaped recovery or this or that. But a move back to trend is not growth. It's just average. And if you've had to do that with paper, and if you've had to flood that with liquidity, whether it's coupons at the Fed or actual, coming out of the TGA and, sprinkling, 65 cents to every American, that's not growth.
Yeah, and you have to keep doing it, right? I think that's the Japanese example. If you have to keep doing stimulus one after another, it's not really stimulus. It can't be, because stimulus works. It stimulates the economy, and therefore the economy takes over from there. If you're still doing this, what are we, a year and a month later, and we're still looking for, we need more. We need trillions after all these 13-digit rescues. We need more. 14 digits. That doesn't describe a solution. It describes the problem. It describes the depth and the degree of the problem, which is much bigger than we think. And it goes back to what we talked about at the beginning, is that, we're not creating wealth. You can create currency units, and bank reserves to me are the least usable form of currency units. That doesn't help you create. It doesn't help you create the process that we need for economic growth. And neither does government handouts directly into the real economy. That only exacerbates some of the negative factors, the inefficiencies, and the things we don't want to see happening. It only makes them worse. That's the Japanese example. The more the government does, the more inefficient the economy becomes, the less growth you're going to see, which means more the government's going to do, the less growth, and so on and so on. And that's exactly what we keep doing. And COVID common sense, it exacerbated already a lot of deep structural sicknesses that we still don't even talk about.
Stasis mulus. Stasis mulus.
Stasis. Yeah, exactly. That's what it is. The more the government does, the less you're going to like the results.
Gentlemen, this is awesome. I want to be respectful of your time. I'm hoping that we get to do this again soon. I beg of Emil every week. I'm like, when are you guys coming back? When are you guys coming back?
It's my fault.
So I'm not going to put you on the spot, but I do expect to have you guys back in at least 1 month, because I think it's a lot of fun.
Writing it down.
And I really enjoy spending time with you guys. And please check out Eurodollar University, Making Sense with Jeff Snider and Emil Kalinowski. Parting thoughts, anything you'd like to give our friendly audience?
Well, Nick, I would just say, I think you need to just bring on David Parkins, and he could just draw you a sketch, and you wouldn't even need us to come back. That would be the end of it. So get David on, and then we will be alleviated of any responsibilities.
Emil, thank you, man, for putting this together. This was awesome.
My pleasure. I've written down May, end of month. Let's book it now. And thanks as always for hosting us.
Let's do it. You guys are great. Making Sense, Eurodollar University with Emil Kalinowski and Jeffrey Snider. They are the best in the business. And don't do anything my poor insolvent drunk, strung out on meth grandmother wouldn't do. And she's smoking water again.